All right, guys. So for those of you who are just joining, sorry, let me fix that real quick. That looks about right? Okay. So sorry, it's not perfect, but it's the best we got right now. So for those of you joining, this should be the second part of our Chapter 3 accounting equation workbook. So we're on problem 4. Okay, so they're all up here. So if you are trying to follow along, because of the different pages, we'll just have to stick with it where you can't see those, but just know that that's what I'm referencing when I'm talking about the different transactions. Okay, so again, if you need those, keep those in front of you. Basically, what this wants us to do is, first off, we're going to identify the accounts affected, right? So it'll tell us what happened with the transaction, and we'll identify what accounts are affected. And then we're going to write the amount of increase or decrease in the space provided. Okay, and then we'll also balance, like we'll determine the new budget for each account. Okay, so this first problem is saying that Mrs. Ortega is the owner, and she opened up a checking account for the business by depositing $60,000 of her personal funds. Okay, so we know that on this first line that Miss Ortega opened a checking account and put $60,000 of her own in there. Okay, so we know that we just put $60,000 in. 1, 2, 3. Okay, so now the next thing we have to do, we just increase our assets by 60,000. So we either need to decrease our assets somewhere else by 60,000, or we need to add 60,000 to one of these 4. Okay, so in this situation, owner's equity is what we will actually do, right? Because we know that owner's equity is something where we don't owe someone, we just own more in the company, right? And again, everything in this chart, we're using it based on our business and not on a private personal checking account, right? Because you guys might be confused. You might say, well, she just spent $60,000, so why is it adding money? But it's because this is relative to her business. So now she owns $60,000 more in the company, right? So her personal checking account may have went $60,000 down, but in this situation, we're just looking at her business. Okay. So then now that we have that, the new balance, right? This is where we put the new balance. And that is our new balance. Next thing, paid by check the monthly rent of $3,000. Okay, so by check, right? So I'm gonna be minusing $3,000 because I paid by check. So I'm losing $3,000, which means I either need to lose $3,000 on this side, or I need to gain $3,000 on this side, right? So in this situation, expenses goes over here, right? So we're going to minus $3,000. Okay, so I have a negative $3,000. So now I have $57,000 in cash, and again, I'm just carrying down all the numbers. Okay, and so we can see here that what would happen if I was trying to balance it. Assets always equals liabilities plus owner's equity, right? Plus revenue minus expenses. So 57,000 equals 60,000 minus 3,000, which would be 57, right? So that balances, so we're good. Okay, fourth transaction. So we purchased $24,000 of rafting equipment. Okay, so I just used my cash, right? It doesn't say anything because we wrote a check. At the end of it, it says by writing a check. So we're going to minus 24,000. 1, 2, 3. Sorry, I'll put the commas in. That might. Okay. So now we either got to increase our assets by 24,000 so it balances to 0, or we have to figure out where else it's going, right? So in this situation, rafting equipment's right there. So yeah, I'm going to add 24,000. Okay, so now this puts our new balance at, let's see. I might have missed something. Oh, I missed number 3, my bad. Number 3 is not rafting equipment. Number 3 is buying hiking. Okay, so we actually minus 3,000, that's my bad. And we bought hiking equipment. I skipped one. My eyes playing tricks on me, right? But either way, it doesn't change. We're buying equipment, right? So minus 3,000 plus 3,000. So in this situation, now I have a 54,000, 3,000 here. Again, I'm just carrying down all these numbers because that's my balance in each of these accounts. Okay, number 4, this is where we purchased. Okay, so minus 24,000 purchased rafting equipment. Okay, so this stays at, oh, sorry, nothing there. Rafting equipment plus 24,000. Okay, so that stays even still. So now we have $30,000 left in our checking account. We still have $3,000 here. We now have $24,000 here. We still have 60 here. We still have -3 here. Okay, so we can see if we were to add them together, 30,000, we still have 57,000 on this side, and then we still have 57,000 on this side. So we're still good. Okay, number 5, purchase office equipment. Okay, for $4,000 on account. So we're not writing a check this time. We're like doing an IOU. So let's go office equipment. Right, we got $4,000 worth of office equipment. Yay! But now we owe $4,000 somewhere. So that's going to be right here, actually, right? So again, we're just going to carry down all these numbers. Isn't this so fun watching me type? And then we now have $4,000 in this account. That's a comma, yo. Okay, and then we still have 4,000 in this account now, right? So now our numbers change a little bit because if I were to add them up together, right, that'd be 64,000, 61,000. Add these together, it's 61,000. Okay. Number 6, we received payment for guided services. Okay, we received payment. So we actually got our payment of $2,500. So we added it there. And then now we've got to find, anytime it's revenue, right, it's going to be over here on the equity side. So guided services, 2,500. Okay, so that plus that side, it keeps it even. Okay, so now got to update our numbers again. This is why you guys will learn to love Excel in the future, is it would automatically just do these for us. We don't have to manually type anything. But for now, we'll learn by hand. Again, though, if I were to add these together, everything should be balanced, which it is. Okay, number 7, transaction 7. Okay, Ms. Ortega invested a desk valued at $450 to the business. Okay, so now I know that my office equipment goes up $450. Okay, and I also know that my owner's equity was $450, right? Because she invested her personal property, so now it's not her personal property, it's the company's, so the company has more capital now. So again, we will just, actually what I should just do is copy and paste this stuff, because it's not going to even be fast. It takes longer. Will this work? I don't know. Hey, that worked. Nope, we got to like, with the commas. This is why I shouldn't have done commas. Whatever. Right, so this one's 4,500 now. No, 450, my bad. All right, that's right, yeah. And this is still 4,000. This is still, now this is 60,000 and 450. 2,500. -3. Okay, you got all those numbers. Okay, transaction number 8 says that Ms. Ortega withdrew 3,000 cash from the business for personal use. Right, so maybe she's like, I'm paying myself 3,000 this month. Okay, so that means we're going to, she took $3,000 in cash, right? So minus $3,000. Okay, we go through here, right? So then now we're minusing 3,000 from owner's equity. Right, because we minus 3,000 from the asset side, I need to minus 3,000 from this side. So in this case, I'm just taking away capital. Okay, so our new numbers are now 29,500. Still have our 3 right here. Still have our 24 right here. Still have our 4,500. for 450 right here. So I have 4,000 right here. And then this one now turns to, what does it turn to? 57,450. This one's still the 2,500. And this one's still the minus 3,000. Okay. Next thing, we wrote a check to a creditor as partial payment on account. Okay, so like we owed money for something, and we're like, hey, we'll pay off some of this with this check. Okay, so we're going to minus 1,500. Okay, which also means now we're minusing some liability, because now we owe that much less on account. I don't know why it's set up all weird. I couldn't fix it, so I'm sorry. Okay, so now we're going to balance that out, do the math, the mathy math. Whoa, 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 whoa. We're almost there, guys. Okay, and then the math. Oh yeah, we already did the math, so. Okay, and then the last one we're doing. Took a group on a tour and agreed to accept payment later. Okay, so they're like, oh yeah, we'll pay you later, our company policy, yada, 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 right? So we're like, okay, yeah, just pay us when you guys get back from our sweet river rafting tour. Okay, so we agreed to, let's see. So accounts receivable, right? That's an asset. We know that we're going to receive that money eventually, so it goes in that column, the they owe us column, which also means we're also putting on the revenue though, right? Because the revenue goes on this side. So our final numbers carried down should add up to each other, right? So we have this. Hey. What number am I at? Okay, 57, 450. Okay, so what should happen is these numbers should all equal each other, right? So if I were to add these numbers together, I don't have a calculator, but I checked the math to make sure it worked out. And so this one side equals 60,650. Okay, so this should now equal liabilities plus owner's equity. Okay, so what I have to be careful of is like I'm minusing expenses, right? So it'd be 2,500 plus 57,450 plus 3,700 minus 3,000. Okay, so like right here, liabilities is 2,500, and then owner's equity should be 58,150. Did I do that right? Yeah. Okay, so then when I add those together, that equals 60,000, right? 650. So these, boom. Okay, so you can double check that to make sure our math works. Again, we're not doing debits and credits right now. We just kind of went back a step to make sure everyone really understands this, because this is how we do debits and credits now, right? So that should be good for problem 4, and we'll go over the vocab stuff next time.